Thanks for joining us, and again, happy Friday to you. Well, as we open up our markets today, not a lot going on. We have been chopping around on both sides of unchanged, if that'll give you an idea of where we are. Let's take a look at corn. And on the big board with our quotes provided by bar chart here, well, we have March a whole 1/4 cent higher. That's one tick higher. Whoops, and even that went away. Now it's unchanged at 6.16 3/4. About 7 cents off of our overnight high. In December new crop corn, we're 3/4 cent higher at 5.69 right now. Over on the soybeans, where, by the way, we had a sale of 295,000 tons of those soybeans to unknown destinations last night. Well, it's good for a bounce of 3 cents. We are now trading, well, now at 15.46 3/4, only 2.5 cents higher. We had a 20-cent trading range on the March beans from overnight until this morning. September is 3 3/4 cents higher. And if you're wondering what the new crop November contract is doing, well, here's your answer. It's 4.5 higher at 13.97 1/4. Now in the Chicago wheat market on the March contract, we're now trading just 3/4 higher at 7.52 1/2. Not a lot going on there either. In July, we're now up 1.25 Kansas City March. Well, a little more enthusiasm here. We're up 5 3/4 at 7.74 3/4. And July KC wheat is 5 1/4 cents higher. Meanwhile, Minneapolis spring wheat, well, we have the March contract 2 1/4 higher at 9.03, July up 2. Chris Swift is with us. He is with Swift Trading. He's based in Nashville. And Chris, good to hear from you here this morning. Not a lot going on apparently in the grain markets, but they have had quite a wild ride here for a couple of weeks. Do you see this as just maybe some position squaring before the weekend? We do have a report coming out next week.
We do, Marlin. You know, I'm going to lay a lot of it on the energy markets because the energy markets just have not backed up any at all. We saw just a one-day move down, and we kind of saw the grains follow with it. And now all the energy markets in the crude oil and the products are setting new contract highs again today. So it's awfully hard to say, yeah, grains should go down and because some of them are energy related, that we should see, grains go down. So I think as long as the energy markets are continuing to move higher, making everything that much more expensive for our farmers, they're going to want more money in order to put that crop out.
Well, the West Texas Intermediate crude that you're referring to, and we can bring that back up on the screen here, on that March contract, $2.41 higher, $92.68 per barrel, $92.68. I mean, we were concerned when it got up to 88 here last week. And now we're, on the doorstep of hitting $93. Got as high as $92, $93 earlier this morning. What about the fact that Argentina is done planting soybeans right now, they say? The weather's still not cooperating too well on the soybeans here, Chris. Is that going to be a bullish factor next week?
I think just about everything right now is kind of a bullish factor because we're in an inflationary time frame. So what we notice is that in this time frame, when we get negative news, it only barely impacts the market. You get anything that's not negative, and they tend to rally sharply. So it's more the environment that we're in than anything, and just realization that this is an inflationary environment, and there's not anything being done or really can be done to encourage production or to stifle demand, because there's just nothing to do. You got to either let prices go high enough where it stifles demand, or you have to produce some kind of encouragement to increase production. And neither one seem to be at a level that's going to cause a backup in prices.
And it is also noteworthy. Yesterday, the Buenos Aires Grain Exchange lowered their estimate for soybean production in that country by 2 million tons. So we have to keep that in mind, too. Chris, we'll come back in a moment, and we'll take a look at our livestock open right after this. We're back with Chris Swift of Swift Trading. He's based in Nashville. Let's take a look at how we're opening up in our livestock trade. First, live cattle. Here we go. Well, we're mixed. No sense of direction on the live cattle market here so far. February, just 2.5 cents higher. We're at 141.62. The April contract, where most of your volume is, 7 cents lower at 146.67. And so it goes through the deferred months as well, kind of mixed out there. Well, on the feeder cattle market here, you're just a little bit weaker on the nearbys, a little bit stronger on the far out deferreds. You have the March feeders, 15 cents lower at 166.57 in April, down 2 cents. May is unchanged, and that's kind of your dividing line. Anything beyond that May contract is now a little higher. Okay, on lean hogs, we're opening up with February 30 cents higher. We have April now up 72 cents. We're at 99.10 per hundredweight there. It is already 70 cents off of its earlier high, but it actually had a trading range here since the open of almost $2. That'll give you an idea of just how volatile that lean hog trade is these days. Let's go back to Chris Swift. What are you watching for when it comes to the livestock trade today here, Chris?
You know, really, we put on about $5 or $6 in the fat market and close to $8 in the feeder cattle market. And what that's really done is just widen the basis out. So until the cash market starts to show some signs of moving back up again, maybe they just widen this basis out and keep it there for just a little bit until we can get through the snowstorm that we're in. We get active cattle trading again in the next week, and we see if cattle producers are going to be able to pump this market up a little bit. And I have to believe right now that they will, simply because we've seen the on-feed report that showed a little bit more inventory on hand right now, meaning that we won't have near as much out into the future there, as well as we got the information from the inventory report that showed we're just going to be dealing with fewer cattle. So I keep the same pretense going forward in that it's just going to be more difficult for this market to go into a bear market.
Okay, the Dow Jones Industrial Average here so far this morning, sometimes it can be somewhat connected to the livestock demand. It is a little bit weaker right now. The March futures are down 46 points. We're now at 34,912, so pretty solidly under that 35,000 benchmark right now on the Dow. Well, thank you, Chris, for talking with us, and I hope you have a good weekend. Chris Swift with us from Swift Trading. Janet, with that, I'll turn it back to you.